Welcome back to Central News. For some, the 31st of March and the 1st of April can be seen as a profitable time with people and businesses getting their tax rebate, but it can also be stressful getting those accounts finalised. Why is this such an important part of business, and what issues can businesses face? Michelle Malcolm from WHK in Tauranga joins me now. Michelle, thanks for coming on the show today. It's always a pleasure to have you here. Now tell us about some of the issues that businesses may face coming up to the end of the financial year.
Well, there's quite a few things we need businesses to do before the end of the financial year, being 31st March. That's predominantly most businesses in New Zealand's end of balance date. But there's some key things we need them to be doing as accountants, just to help us do our job better when we finally get their information. So the key things to me are bad debts, which a lot of businesses might actually have at the moment, where people haven't paid them. They've been trying to get money out of them, and it's just not proving that they're going to be able to do that. So if we want to be able to write those off for that financial year, we actually need to write them off before the 31st of March. So if they've got an accounting system, we actually have to go in there and physically write them out of the books. It doesn't necessarily mean they're going to stop chasing it, but as long as we can prove that they've really made lots of attempts to collect this information, then we can actually write it off, which means that when we report on their profit, we're not actually reporting on profit which they're probably not going to get. So it will help them get a better take of what they've actually done for the financial year. So that's probably the first key one, because we can't actually do it after the 31st of March, we actually have to do it prior. The second one is stock takes. Time and time again, I just cannot believe how many people actually don't do a stock take. I think they think that we just want them to do it because we want to, create extra work for them. But a stock take is really, really important. So they have to again do that around about the 31st of March, and that's going and counting all their stock, seeing what they've got on hand, and actually giving us a physical stock take sheet, so that when we sort of record that in their books, again, we're reflecting that correctly. Because without the stock, we actually can't report on the correct profit for the business. So again, really critical that they do that and plan around how they're going to do that, because it will mean downtime in the business. So that would be my other next most important thing that I think they need to be doing. Also a really good time to be checking their fixed assets. As accountants, we would give them a fixed asset schedule at the end of the financial year. What I really like my clients to do is actually just have a look at that and go, well, actually, do we still have all these assets? Or have we, actually we got rid of that during the year, we bought some more stuff, and actually just make sure that we've actually got a good record of what we're doing there. So those are three key things that you need to be doing. Another thing we can do as well is keep track of your holiday pay. So if you've got staff that are going to be taking holidays between the 1st of April and the 2nd of June, we can actually bring that into the 31st of March accounts if that was owing at that time. So again, keeping track of that so that we can actually get that information off you at the end of, when you bring your stuff into us.
So there's actually quite a lot involved when it comes to the end of a financial year for business.
There is lots involved, and if people, it creates headaches and they just go, we just don't want to know about it. But it's really important that they actually do these things for us, because it just helps our job to make sure that we get their accounts right when they do bring their information into us.
Now, what other issues do businesses need to be aware of, or do they need to discuss with their accountant about? Good
question. Some of the other things that I would be talking to my clients about at the moment is dividends. If I've got a company, then I might want to look at paying a dividend out prior to the end of the financial year. So that would be something I'd be sort of saying, talking to my accountant, do I need to be doing something, or should they be doing that for us? So take a bit of a proactive approach around that. Another thing which we've talked about before is LAQCs. If they have got an LAQC, and we've been doing lots of seminars as part of WHK around this, and so have a lot of the other accountancy firms, don't just sit on your hands and do nothing. You actually really need to make sure that you know what you're going to do if your company is currently an LAQC, because there's lots of different options. But again, if you haven't done anything, go and talk to your accountant about that, because that's really, really important. The other thing is subventions. They need to be paid by the 31st of March. So again, it's a very technical term, but it means if we've got one company that's got a profit and one that's got a loss, as an accountant we might have done a subvention between the two. Again, that needs to be physically paid by the 31st of March. So if they haven't done that, and they sort of know they've got something like that in there, contact their accountant to make sure that they're actually actually making that physical payment before then. So yeah, there are a few technical terms there, but really important that, as I say, it's a good time to touch base with your accountant and just say, hey, look, another year's about to roll around, what do you want us to do? And just to make sure that you're just going to get all those things in order.
And of course, after the 31st of March is the 1st of April, and I understand there's some tax changes. Can you tell us what these are?
There are some exciting tax changes that are going to be coming into effect. The most exciting one probably for individuals is, as I say, the top tax rate for individuals is 33 cents. So that's sort of been in effect for some of this year anyway. But for companies, the tax rate is going to go down to 28 cents in the dollar. So it's currently 30 and it's going to go down to 28. So that's actually really exciting for companies. They're going to get a bit more of a tax break, which is fantastic. Also, RWT rates are going to be changing, so you'll probably, people that might have interest at the moment, they are actually going to have to re-elect what their RWT rates are going to be going forward. So again, good time to be talking to your accountant. What should my rate be, to make sure we actually elect the right rate for them, because otherwise they might actually end up paying more tax than they need to, and then have to wait for a refund. And also depreciation on buildings. That's going to be changing, which is the downside of the other upsides, is that depreciation on buildings is we're not going to be able to claim that going forward from the 1st of April. So again, for a lot of businesses, we need to know what that is, because it's going to affect our tax going forward. So the more we can get a handle on that, and they can get a handle on that, there's not going to be any surprises, because as accountants, we don't like to give clients surprises unless we really have to.
Awesome. Thanks, Michelle, for coming on the show today. There's lots of information there, and definitely what businesses and individuals can benefit from as well.
Great, thank you.
That's the show for today. Thanks for the feedback that's been coming in. Don't forget, you can always email us, news@tvcentral.co.nz, or hop on the website, tvcentral.co.nz. Thanks for joining me today. I'll see you tomorrow. I'm Katrina McKinley. Have a good evening.
Supporting local content so you can see more of New Zealand on air.